Ever wonder what professional money managers mean when they say they can read the market? In today's episode, I share what they mean and how I do it. This episode is brought to you by Stonehill Wealth Management. Money can be stressful, but it doesn't have to be. Our team helps people understand their finances and make smart choices for their future. Let's get into reading the market. Imagine the market is like a big party. Everyone there has different opinions about which investments are the best, and their moods can change quickly. Technical analysis is like listening to the music and watching how people are dancing to get a sense of the overall mood. Upbeat music and excited dancing, the mood is positive. That might be a good time to buy assets. Slow music and people leaving the dance floor, the mood is shifting. Time to rethink things. Music stops and everyone looks confused. Something unexpected happened. Better wait and see. Technical analysts use charts and graphs like clues to understand the market's moods and make smart decisions. They watch for things like breakouts. An asset's price suddenly jumps up or down like someone doing a crazy move. Trend lines. An asset's price moves in a consistent direction like a dancer in harmony. Volume. How many shares are being traded, which is similar to like how crowded the dance floor is. So let's put this together and look at my approach, right? And let me give detail into my approach. Some people only use technical analysis for one specific market or an investment idea. That's not my style. I like to look at the big picture of all the major investments around the world and use both technical and fundamental analysis to find where things are in harmony. So here's how I use it. First, I try to understand what the market believes about each major type of investment compared to what's actually happening around the world. Let me give an example. So typically, and this changed over time, but these are typical and you can monitor it and watch it and the market will tell you what they think. But typically, people buy gold when they're worried about inflation. It's a way to protect their money. Bonds are like super safe investments that people use when they're worried and want to protect their money from a recession. S&P 500 stocks. These are the most popular stocks in the strongest economy in the world, in the modern day world. It's like a reliable savings account for investors all over the world. It gives them a good place to easily access their money. Bitcoin. Bitcoin is like a new type of investment that's becoming popular with tech-savvy investors. These investors pay close attention to what central banks do with interest rates because they understand how those moves can affect a new investment like Bitcoin. And I'm overgeneralizing these asset classes because different environments cause them to move different ways, but I want to give you a big picture thought of how they fit together. So let's snapshot the market right now, right? As I look at it and I look at the charts and graphs and I see that gold had been going up a lot since the beginning of the year, which is when we began buying it, and bonds have been going down. And the context of that is gold had sort of been trading sideways for a minute. And so this tells me the market expects higher inflation over the next few years, which matches my fundamental analysis of what the governments need to do in order to get rid of this debt. The S&P is also going up strongly, which means global investors are feeling confident and putting their money back into their savings account or the market. This tells me there's a lot of money flowing around, which is good for investments. Bitcoin has been moving sideways for a few years, but it's been getting stronger in the last 12 months. Combined with my analysis of other markets, this tells me that Bitcoin is ready to take off because I call the digital economy the gravity economy. And what I mean by that is they're the most productive economy, let's say for the next decade, where all the talent is going and where all the innovation is happening, acts like gravity to wealth. It's where money wants to come to. And the only thing that you need is like liquidity to allow that money to flow down that way. So when Bitcoin broke out of that trading range where Bitcoin is the token asset for the digital economy, then that kind of gave me a clue to, all right, cool. Gold gave me some liquidity indicators. S&P's moving with the liquidity indicator. Bitcoin broke out of its band. All right, I've always been bullish, but the timing of it is very, very, very attractive, which is why on an episode that dropped probably last week from when you see this, a week ago from when you see this episode, I talked about buying options on Bitcoin miners. This was what I'm seeing in the market. So why does this matter? In my long-term analysis, the digital economy, as I mentioned, is the gravity economy in this market cycle, meaning it's very attractive to money. Technical analysis helps me fine-tune my timing. When I see all the signs pointing to a lot of money coming into the market, it gives me confidence to invest more aggressively in my gravity asset bets. Think of it like this. If you're pushing a heavy object, it's much easier to get it moving if you have a lot of people helping you. That extra push from all the money flowing into the market can help my investments grow faster. But I don't just set my plan and forget it. I check in every day. I talk to other smart people. I listen to different opinions. It helps me stay on top of things and make sure my analysis is still on track. Investing is like fun or a game to me. I enjoy the challenge of keeping my mind open and see it all come together. Want to learn more about investing? Join my Inner Circle newsletter. It's packed with my step-by-step thought process around investing. Plus, you pay what you want. No tricks, just valuable information to help you feel confident about your journey. The link is in the description, or you can go directly to wealthbuildingmadesimple.us. Like, subscribe, and hit the notification button for more insights. Thanks for hanging out. Be fruitful and go multiply your money.
Philip Washington Jr. is a registered investment advisor. Information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment strategies. Investments involve risk and, unless otherwise stated, are not guaranteed. Be sure to first consult with a qualified financial advisor and/or tax professional before implementing any strategy discussed herein. Past performance is not indicative of future performance.